Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So here is the target that we have specified. It's been completed, but actually it doesn't make our life actually easier. It's just because the setup that we were considering, and which is we treated as a major setup as possible upward reaction to strong weekly support, it makes it a bit more tricky. It's just because of yesterday's performance on the ADP report. On the daily chart we do not see something really special. The only thing to mention is that recall what we said about the reversal session in a point where theoretically bulls should start taking control of the market. It's not a good sign, and as you could see a bit later on the hourly chart, its overall performance yesterday was rather bearish, which makes under question the possible reversal and validity of the head and shoulders pattern. It could happen so that we will have to wait for some different pattern, which is now chances that this head and shoulders will fail looks really significant, especially if we will get as strong payrolls as ADP yesterday. So meantime, currently this setup is not broken yet. Market stands approximately in an area that we have specified, 1910, 1915 area. It's keeping the bottom, keeping the hand shoulders valid. It's just now we need to get the reaction around this point, because this point, as you could see, actually vital for the hand and shoulders, because this is bottom of the right arm, and if market will drop below it, start going back to the bottom of the head, it means that pattern has failed, and we will get the breakout for the lows. What next pattern might be formed, where it will be formed, if market will show reaction on strong conference support area on the weekly chart in general at all, we do not know. And if this pattern will fail, it's probably we will have to postpone any talkings about taking long position for some time, because it definitely will take a lot of time for market to form something else. So that's why currently all eyes on this performance. In this point, I wouldn't say that's too impressive. So if we'll take a look at the hourly chart for the hand and shoulders, this is negative sign of this type of action, because this is part that should belong to bulls. So when you see on the bullish part this type of action, it's always negative moment. Second moment, which is also negative, take a look at the reaction. We do not see anything of this kind. We do not see anything of the thrusting action or something. It's cradled very similar to this one, right? So some kind of the godless triple to sell shape, which is also potentially bearish. That's why, despite that market stands right there in the points that we have specified, I wouldn't hurry up or take in the long position by far. Of course, it's not forbidden. You could try if you would like to, and if in general risk is acceptable to you. Just, well, maybe you will be right. For example, if we would get the poor payrolls, in this case we could get the skyrocket rally here, and your risk will be just reasonable. But if you're ready to make the bets on uncertainty of the payrolls report, if you're not ready, it would be better to wait and see what will happen. Because overall technical picture, if we'll take a look purely on technical signs, it's not bullish. So this performance, this type of response, it's not really the way how bullish market should react on the bottom of the right arm with the hand and shoulders pattern. That's what we have. Speaking about the bearish positions, well, if we wouldn't have the payrolls today, I would say that theoretically it is possible to consider taking the short position on some fib levels with the stop somewhere above this area, considering possible downward continuation and breakout. And theoretically this is possible. But once again, payrolls. So be prepared that if you will take it, you will get the additional risk and the possible loss if indeed payrolls will be weak and this market just return it back up. So that being said, more conservative approach is just to wait for the numbers and then to make the decision, or make the decision on Monday when we will get the information. If you still would like to trade through the dumpy right of the payrolls report, it is possible, but you have to acknowledge the risk. It is possible as on the long side as on the short side. I think that in the current situation, everything probably will have the equal chances, just because it depends only on the numbers. Yes, based on ADP, we could suggest that probably they should be strong. I mean payrolls. And technical picture also stands more in favor of the bearish continuation. So maybe bears here have more chances at the current moment. But as you understand, poor numbers on the payrolls could change the situation drastically. So that's what we have. Well, and once we will get the information, so if hand shoulders will survive and market starts upward direction, this will be one story, and we'll get this ABCD, as we said, with the more extension to the 1948, 1950 daily conference resistance. Will be next destination point. In case of the fairly hand and shoulders, unfortunately, bulls will have will lose the background, and will have to wait for something else when the market will form something, if it will form at all. So that's what could happen.